So what I'm really saying to you in this video is definitely make your tax sexy by seeing what you can save. You could be in a position to save hundreds, if not thousands more on your tax bill, on your accounts. So look into it as soon as you can. Speak to us at taxtwerk.com today. My name is Ruth Noel and I'm the author of How to Make Your Tax Sexy and the founder of taxtwerk.com. Tax deductible expenses. You can claim expenses including your personal cash payments. And this is a massive area, but I'm going to drop in a few of those things that you can cover right here, right now. So number 5, self-employed car costs. You can claim the cost of actually using your car for business journeys. Just say, for example, you're often in meetings or you travel internationally for different things relating to your business, then you can write off some of that. You can claim that back. Winning. So that's another quick example. Well, there was 2 in there. So I said travel, like for example, air miles, airport costs, hotel costs, and then actual running your car as well. You just need to make sure that you keep the receipts, you have the mileage log and all of that good stuff, and then that can go into your accounts. Number 6, annual losses. So this one is really a big one in the technology area, app development, startups as well, people that are starting their own social media business. Sometimes in the first couple of months or in the first year or so, you're actually basically running at a loss. And okay, we all want to make revenue, we all want to make a profit. Of course, that's the main goal, right? But the key thing I want to just let you know is you can carry forward your loss to the next year. So tax-wise, it's actually giving you some breathing space. It can give you some relief. So put it into context. Say, for example, you're running a e-commerce store and your first year is a loss. So you actually were in negative, you were actually in the red, and you're not very happy about that. But then the following year, you actually get back on track and you make, say, 6 figures in your business. You can write off the previous year. And why you want to do that is because #winning is going to lower your tax bill. So that's why we always say to people, if you're just starting up, if you're not making any money or you're making a loss, still get everything on track, get your tax ducks in a row now, because this video has just gone over 5 minutes. I mean, I think it went over a long time ago. But I'm into it now and I've got more to share, so I'm going to keep going. So yeah, definitely start, just record everything you're investing in your business right from day 1. It's going to be beneficial to you later. Number 7, this one again is more for UK, but in the US you can probably do something similar. So still pay close attention to my US peeps. So capital gains tax allowance. You can take advantage of tax-free capital gains. And this is a massive area. If you've got questions, then let me know. But capital gains is to do with when you're buying and selling bigger assets. Number 8, cash flow boost. This one, some people do this from time to time. And this is not something that I would recommend to just do it just willy-nilly, just for the sake of minimizing your tax. I really would not recommend this one at all, but I want to give you the information, and you might be in a situation where you need to do this. So number 8 is cash flow boost. What you can do is you can change the accounting year to improve your cash flow. So you can change dates of when you're starting or stopping your year end in your business. But just warning, definitely get professional advice before you do that, and you need to have really good reasons and evidence and all of that to back up what you're doing. Number 9 is payments on account. This is particularly for self-employed individuals, pertaining to the UK as well. This is really a way to reduce your accounts for the next year. So in the UK, if you're self-employed, not a limited company, but if you're self-employed, for some reason, they like to charge you extra for the next year. So they get the government and the tax godfathers of tax, who shall remain nameless in this video, they like to get a boost to their own cash flow. So they ask for an advance for your next year's tax bill, even before you've run the year, before you've even calculated it. So in some situations, depending on your unique circumstance, you might be able to reduce your payment on account and bring that down, therefore paying a little bit less tax, eh? 10. The last one for this video is top up your pension. And this applies, my voice, it just went like a Manchester accent, I don't know, or Liverpool, I don't top up your pension. So pay more into your pension and therefore you pay less tax. This is going to be applicable to quite a few different countries, for example the US, and also for the UK for sure. In the UK there's even this wonderful thing they have right now, which is where if you're paying into your own private pension, the government gives you money for that. So they give you 10% on top of whatever you pay in, which is like, oh my gosh, to me that's exciting. So you might want to consider starting your own private pension. Even if you're young, even if you're a baller, now is a good time to start getting those things in place.